So it finally happened. This stuff we've been talking about in podcasts here at 30 Market Moves for the last 2 years, it's now apparent to everyone. The market has reached a moment where the fake job numbers can no longer be manipulated. And, people are talking how, these revisions, they don't impact the markets, or at least they have not been impacting the markets for the last few years. But I kept telling everyone that at some point it is going to matter. At some point it is going to hit the market. And I think what we've seen yesterday on August 1st, this is just the tip of the iceberg, right? We knew that at some point they could no longer hide the numbers. And like the actual numbers that were reported yesterday, oh my God, the actual numbers that in actuality exist, they're probably 10 times worse than the already bad numbers that they reported yesterday. But it wasn't like the number that was reported yesterday should be the focus, right? But rather the revisions. They revised the jobs 258,000 less than the jobs that were reported. Well, shit, if you take that out of the last 2 months of job reports, what do you think the stock market would have been if those reports were reported accurately, quote unquote, because, even if they were reported accurately, like you could call yesterday's number accurate, that's so far from reality, that's still not accurate. Because if you follow the pattern, right, the number that was reported yesterday is still going to be revised next month. So the point of market realization that, hey, this United States consumer strong bullshit story that's been existing and been prevalent in the markets over the course of last, 4 or 5 years, that shit is gone. And so we're at the very inning of a complete market meltdown. In this artificial, computer-driven market, AI-driven market, it will last 122 days. That's over, guys. So don't be shocked. You come Monday, the fucking market is collapsing even more. And of course, you may get a chance if by a miracle you get a fucking bounce. And the reason why the market could still bounce is because, well, shit, now they're going to shift the focus to what? Well, the Federal Reserve is going to cut the rates. In my last podcast, I said it, guys. For those of you who listened to it to the end, I said, look, if Trump wants Fed to lower the rates, instead of bitching and whining, just show the real state of economy, And of course, that doesn't look good for Trump, but damn it. So now he found the guilty party, right? The Department of Labor Statistics. Man, it's their fucking fault. They fucked up. But he got the job done, right? Because that's the only way for the Fed to cut the rates. So the market may shift the focus temporarily to the rate cut. And historically, you'll probably have a shitload of Wall Street analysts going to go on TV and tell you that this is good for the market. Oh, now the Fed is going to start cutting. It's going to be beautiful. They're going to be printing fucking money again. It is so good for the market. And I'm here to tell you that, on the surface, that appears to be valid. But if you study situations, there are situations in history where rate cuts lead to a complete market meltdown, Armageddon type scenario of transition from 2007, 2008, 2009. The market first began rolling over, but it really began collapsing when the Fed initially cut the rates in 2008. So I believe that contrary to what you will hear in many media channels, this rate cut that is coming up in September and has a high probability outcome is this rate cut is going to bring market Armageddon. So any kind of bounce that the market makes between now and September, that is huge. That's going to be the last chance to short it big, the big short opportunity before the grand collapse. And by December, I'm telling you, shit is going to get so ugly. I've said it many times. The market is still going to go lower by 50% from where we are right now. So we're talking about a humongous drop. And the catalyst for this is, like, you just seen a preview on the job report yesterday. And I'm saying the reality is way far worse than the numbers, and like the admission that, hey, we've been living in a fairy tale and we've been lied to again and again by the government. I mean, it shouldn't shock anybody, but what should shock everyone is the fact that they can no longer hide the actual numbers. They have to, they can no longer manipulate them. And the numbers from here can deteriorate at a speed of light. So like the next job report comes September, it could be, it's going to be a negative number. Like, it's going to be a negative job report. That's a fact. I mean, Trump can say he's going to, fire this, hire some new guy who knows how to calculate job numbers. Man, they couldn't calculate job numbers for years correctly. What the fuck is going to change now if you bring somebody else on there to calculate this shit? Nothing's going to change, because what I'm saying, the state of economy, it is so deteriorating at such a rapid pace that it's going to be impossible to fudge the numbers the next time. So September job report is a disaster, and then everybody's going to be talking, okay, is it September quarter point, or is it going to be half a point? Remember, the only time the Federal Reserve really blinked was last year, after a similar setup when we had a little shakeout on the employment numbers, but more importantly, something that nobody seemed to remember, later in August, we had a revision of employment numbers for the entire year of 2024 at the time. So last August in 2024, they revised the numbers, and the revision was so drastic, but yet the market at that moment completely ignored it. And it was remarkable, right? The revision was close to 1 million jobs. So basically, all the jobs that they were reporting from January until August of 2024, the grand revision was done. I don't remember the exact day, but it was like late in August. And the market on that news, it sold off a little, maybe gave like 40 points, 50 points maybe, and then it quickly recovered. But do you understand how fucked up these numbers really are when you're off on employment numbers by 1 million? That means every month they were off by more than 120,000 jobs, 130,000 jobs. And some of the reports only showed 100,000 gains in employment numbers. That means some months last year were negative. But yet, the market just was indulged with the idea that the United States consumer was strong and the employment picture is great and GDP is going to be beautiful and all this crap that is absolutely impossible under market conditions of stagflation. So stagflation case is now going to be absolutely unbeatable. And the fact that Federal Reserve is going to be cutting rates, okay, you'll have high probability now of cutting rates at the time of stagflation. That is the worst shit that can happen, okay? Because that means inflation is going to spiral out of control even more, okay? You think dollar is losing its buying power today? That shit's going to get wild, okay? And so under these conditions, I mean, there's certain parts of the market that will absolutely break. And it's going to be a domino effect where one part of the market breaks, leads to a break in another part of the market. Everybody's leathered up, even though they're saying, oh, no, we're not leathered up like crazily, like back in 2000, 2001, 2007, 2008. But it's bullshit, okay? People maxed out on cards. People, nobody's buying homes. Nobody can sell a home. Why? Well, because, I mean, it's not about the rates, okay? People are out of jobs, man. They can't, who's going to go buy a house if they don't have a job? Or who's going to go buy a house if their business, used to do so much in revenue and profits, and now they're making half of what they used to? So, and the buying power keeps slipping away, who's gonna in the right state of mind go buy a house? Okay, so it's not, but they keep blaming the interest rates, and so temporarily you could get a bounce in some sectors that you should be taking advantage of shorting, such as the housing sector, the lending stocks that that are borrowing money, including, I mentioned on the last podcast, like the crazy Capital One trade, right? On surface, it looked good, but like if you look underneath, it was complete reversal. People were dumping it the next day and the second day. And I mean, that was a sign of a top in financials. And so financials dropped yesterday, sure. A lot of stocks, as a matter of fact, very few stocks did not drop yesterday. And they will next week. So the stocks that did not drop this week, like GEV and LLY, I mean, they're absolutely going to collapse the fuck out next week. As a matter of fact, LLY for next week could be one of the most lucrative trades. Now, of course, we got to see. The earnings report is on Thursday. Chances are they're going to slash their guidance. They're going to slash their forecast. They're going to slash the profit because, look, they're not going to sell. There's issues. There's some serious issues with LLY. And for those of you that wonder, well, what can it do as far as the chart concerned, you should go look at the chart of REGN, which is an awesome pharmaceutical company, ticker REGN. I mean, we used to trade this thing when it used to trade back at $50. Well, as you know, recently, in the last 12 months, it was trading north of the $1,000 range, and now it's at $500. So basically, the stock is down 50% from all-time highs in the last 12 months. And my point is, you could see LLY make a similar size move. I'm not saying that's going to be a move that is going to make in one day, but we're expecting a big fucking move. And the market, surprisingly, at this moment is only pricing such a small size move for LLY that I think that's what makes it such a valid trade, because the move could be over 100 points on Thursday. Of course, I'm recording this on Saturday, August 2nd, so we're 5 days from the earnings report, but, clearly it could start selling off Monday, Tuesday, Wednesday before the report, so then the drop on Thursday could be diminished if that takes place. Now, clearly, if this stock keeps running Monday, Tuesday, because it is a healthcare sector, and there's another way to think about it. Basically, if you have entire market crashing like yesterday, then what do big banks buy? What do the retirement pension funds buy on a day like that? Well, they go to the safest place and something that has somewhat of an opposite correlation with the market, which would be the utilities and the healthcare stocks. Sometimes you would see them on occasion as a run for safety, but clearly we had a run for safety. Yesterday, bonds went up, interest rates down. You had basically even the greatest stocks, based off the recent earnings reports, they were taking profits in Meta, profits in Microsoft. Apple couldn't catch a bid despite of surprisingly good numbers. So it didn't matter whether the stock, even companies that did a triple beat, they still drop. Ticker SYK, Stryker. So, and you could see this sort of setup going into some of these reports as if, we understand the report is going to be good, but damn, we're going to sell anyway. And so that's the predominant market top trade that we are seeing happen more and more. And I think some trades that could have dropped this week and prior week on the earnings, they are going to gain some serious momentum on the drop. I'm referring to the ones that haven't dropped, like Starbucks, right? Initially it popped, and then go look at a Starbucks chart now. It's gone to total shit, right? At this point, after the earnings, it popped to 98, and now the stock is at 85, 86. And if you look at the candles, what's meaningful is the size of the volume that accompanies these candles, which tells you that a lot of people are getting out of stocks like this. You just look at, the dominoes are dropping. Like, fuck, there could be occasionally one exception to the rule, but if you take, any stock that's associated with people dining out, or even something simple like, buying coffee at Starbucks, all these stocks are tanking. CMG, right? What did it do? Like 15% drop since the earnings report. You got Shake Shack. That was a new one yesterday, right? That one, I mean, shit. Fucking at one point, Shake Shack was down 30 points yesterday. You got, McDonald's is reporting next week. I mean, what do you think is going to happen there? You got, it's just two scenarios. It's going to be pop and drop, or it's going to be fucking straight drop. I'm leaning on MCD more towards like a straight move 3 drop down. And that shouldn't be a hard trade. I mean, it's got probably 80% plus probability of working out because, well, shit, I mean, that sector is just, it's shit. Their profit margins are going down. They're requiring more and more sales to maintain profitability. And, I mean, it's clear now that the sales are going to be going lower. And that means the entire sector is going to have to reprice the multiple, just as the entire stock market is going to have to reprice the multiple. I mentioned in the last podcast, basically we're trading at 23 times earnings, and the market's going to get repriced to probably in the next 3 to 6 months is going to get repriced to a multiple of 13, 14. So we're talking about, but I'm talking about the market overall, like S&P 500, 50% drop, right? But there's certain stocks that are going to drop by 70%, 80%, 90%. And we're in that transition point right now where sales are going to start taking a hit, earnings are going to start taking a hit. I'm not saying for all companies, but like excluding the big heavy tech names, which I mentioned in the last podcast, there's a point of marginal utility component, which I was trying to explain as, you can think of it as these 5-10 mega cap AI associated plays. They're only going to do good up to a certain point, because when the rest of, 95% of the other stocks and businesses are not going to do as good, they're going to be collapsing. Then the impact on these best of the best AI plays is still going to be witnessed in their share prices. I mean, their businesses are solid, but they are going to feel the impact of the entire economy nosediving, of the entire sectors, such as the restaurant sector, collapsing. You're going to see some wild plays, guys. And I'm saying just this is the beginning of the Armageddon. And so far we just covered the job report, but I wanted to bring your attention more closer to the copper chart. Copper dropped 20%, actually dropped more than 20% this week. And if you listen to the media, it was largely attributed to the tariffs. And so the one explanation that you're given is not, I don't believe that is the real explanation for the drop in copper prices. But basically on July 8th, Trump said, okay, we're going to put 50% tariff on copper. And so that normally spikes the prices if you put tariffs on some. But then when he confirmed that this week, copper price, we got all the details, right? Then it looked like, okay, well, there's a lot of copper materials that could still enter the country without getting tariffed the hell out. And so partially the explanation or partial drop in copper prices could be attributed to the fact that, okay, it's not as bad as feared. We thought, hey, 50% tariff across the board. Well, it turns out there's only some shape of copper that's going to be at 50%, but there are some copper components that are not going to be tariffed at 50%. They're going to be tariffed less or not tariffed at all. And so it's, it's the little details that basically the market expected something wild, 50% across the board, and we just didn't get that. And so they thought, okay, well, there's no reason for these high copper prices then, and so the market starts selling off. But the drop continued largely due to the slowdown in the manufacturing sector in China. So as you know, China is the #1 world consumer of copper, and it's often viewed as the leading indicator of the economy, forward-looking production of the manufacturing sector and therefore the economy, or a large part of the economy. So when that report came out that Chinese manufacturing is not getting an uptick, that it's a 5th month of shitty numbers, that's when the copper really started selling off big. So, which basically takes us to a situation where literally, if you look at the copper chart and then you look at an S&P chart, copper collapsed the day before the market began dropping. So if you're gonna, take all the economic data, take all the economic reports, just if you were just to study charts, and you see fucking copper dropping like a rock. We had an okay trade, but the options were so fucking overpriced on copper, you could make like a killing. But guess what? As a trader, you look at that, okay, if copper is an indication of a strong economic slowdown, okay, and you're a trader and you're looking at that, what do you think is happening next? Like, what is your next trade? You're looking and fucking copper is collapsing in front of your eyes. What do you short next? Well, sure, you can short the S&P, you can short, NASDAQ, you can short the RTY. I mentioned in the last podcast that Russell 2000 is the total shit, and opposed to the common belief on Wall Street that the broadening is happening, all these small companies are going to do exceptionally well. I said it's exactly the opposite is going to happen. And so turned out to be a very precise argument on my part, because the biggest drop out of all the indexes percentage-wise this week was in the Russell 2000 or /RTY if you're trading futures on that. But the question is simple, okay? You see a drop in copper. What the fuck do you short next? Oil, okay? And clearly there's some, I'm not saying you got to look at the charts, guys, but oil was hitting 70 at the time. The copper was like making a sharp drop. And clearly World War III is in progress. There's a lot of things. We're in the middle of a hurricane season right now. So historically speaking, like August, September, they're kind of dangerous months because, refineries stop functioning properly. They get hit by the weather conditions. Oil supply normally drops in the month of August and September historically. So normally those are decent months for the price of oil. But when you have copper chart literally screaming at you, fucking biggest economic slowdown of all times, okay, then what you do is you go and you short oil. And so that was one of the biggest trades yesterday. And hey, we had some big trades this week on some things. We had some big losses on a couple of trades, like the LLY. I mean, we were up on the trade hugely, and then the trade went complete shit yesterday. But we made so much money on oil puts, guys, that fuck. Oil was the trade. All you had to do is short the fuck out of oil. And if you were trading with me or another coach here at Touch Market Moves, you would know. Fuck, we shorted the fuck out of oil at 70, and we just waited for that thing to drop, and it sure did. And there's, like some people they get confused. They're looking at the chart of oil and they just don't get it. Oh, Leo, it dropped fucking $3. What did the trade make? The trade make over $500,000-$600,000 for some of our guys. So finally, we had a few guys hit Mil Plus this week after trying. Some of them, you'd be shocked. Some of them been trying for a few years, but they fucking did it. They made it. and you may hear from some of them over the weekend. But the point is, I'm still somehow getting some traders that won't take 30 minutes to set up their fucking trading account correctly, right? So, if you're trading with a coach and your coach tells you, hey, we're buying oil puts, right? What does that mean? We're not buying oil puts on oil companies. That's not the trade, because I'm telling you, there were two companies, oil companies, that you could have shorted, such as, for example, ExxonMobil yesterday and Chevron. Both of the companies, they didn't fucking move. When a company you're trading directional options on does not move, you're not making shit. Okay? But oil futures moved by more percentage-wise than the futures on S&P, than the futures on NASDAQ. And so imagine, your coach is telling you, hey, short the fuck out of oil, utilizing puts on oil futures. And you're sitting there, and you're like, well, fuck, I don't even know how to do that. Well, what I'm saying is, many guys, they say, hey, I want to make $1 million in trading, but yet they won't even take fucking 30 minutes to set up their account properly. They still trading with fucking Robinhood. Please, get the fuck out of here if you're still trading with Robinhood. Now, maybe a year or two from now, Robinhood will finally offer trading options on oil futures, but at the moment, if you got a Robinhood account, you cannot fucking take that trade. And that was $500,000 plus trade yesterday. So what the fuck are you calling yourself a trader for if you simply cannot even follow simple fucking instructions that we give you here at 13 Market Moves? Go set up your account at Tasty Trade. Go set up your account at Schwab, former TD Ameritrade, right? Think or Swim. That's the account you want. The IBKR, if you have to, international brokers. I mean, they have a ton of products that you could be trading that you can't trade. They got killer hotkeys, right? I mean, there's so many advantages. And yeah, their platform may be a little dinosaurish kind of looking, but don't go for the look. Look at what you can trade, because, if you're just trading S&P puts or calls, man, you can't do that. If you want to make big money in trading, and for most of the guys that, making $1 million plus would be considered somewhat of a decent accomplishment, because most of the traders, they just come to trade because they want to make a couple of $1,000s a day or some bullshit like that. But if you really focus on the right shit that we've been trying to teach you and share here with you at 13 Market Moves, and if you don't give up, and if you're not the guy that trades on a Robinhood for the last 5 years, disregards everything that he's being told, there should be no reason that at one point you will hit your $1 million plus. And you know what? What's the craziest shit? It's the guy that has the determination to stay with the program for multiple years that finally makes a $1 million plus mark. That is so valuable, because that's the guy now that's going to hit 2, 3, 4, 5, 10 plus mil. Okay, because now he understands. He finally he gets it. This is what it fucking takes. It's putting your emotions aside, making a fucking plan, and sticking to the plan. Many traders say it, but so few are actually doing it. And you know why so few traders are doing it? Because it is so goddamn difficult. Okay? It's fucking difficult. It is a lot easier to jump out of a fucking trade when, let's say, you're in puts and the trade starts running against you. Like there was a moment yesterday, right, when S&P drops and then it starts running and it's back close to 6,300 level on S&P futures, and you're sitting there thinking, well, sure enough, oh shit, they're gonna buy the dip again, we're gonna be back to all-time highs. You could be thinking this stupid shit and ignore everything on the charts, like the strong vol. Like in the last 2 days, if you pull up any indexes, if you look on, let's say 6-month time frame daily, you're gonna see that the last 2 trading sessions, we had the biggest sell volume since April. And that is meaningful. That tells you that a lot of people are getting the fuck out of the market. So when you're going to get the bounce, sure. I mean, it's not going to go down in one straight line. But when you get in the bounce, what does that mean? You short it. You short the bounces. You focus on shorting the bounces. You do that for the next 6 months. There is no fucking way in the world you're not going to make $1 million plus. Okay? The only way you're going to fail is if your account is not set up, you're trading some bullshit instead of trading the part of the market that's moving the most, because that's what you need to be trading something that's moving a lot when you trade directional and options. That's what you need for a big victory. And so if you're trading the part of the market that doesn't move, opposed to the part of the market that moves the most, like oil or RTY, then you're not utilizing the opportunities that the market is giving you. And if you're a trader, then you'd better get good at utilizing any sort of sector in the market that is moving, that is making a move expansion. By the way, yesterday was officially the first move expansion day in like last 100 plus days. The market was down over 100 points compared to the norm of moving plus minus 20, 40 points, especially in the last 2 months. So when you see that move, you know there is a shift. You know this is a trend reversal opportunity. Combine that with everything I mentioned in the last few podcasts, basically highlighting how various sectors of the market, including stocks from a variety of different industries, how they are dropping on earnings beats. They're actually reporting good earnings, but the stocks are collapsing. Reporting good earnings, beat on revenue, beat on profits, and the stocks are still going down. That is a classic sign of a top. You take that information, you combine it with the fucking charts, and look at the big-ass candle volume, okay, in the last 2 trading sessions. That tells you the market has shifted. We're no longer in a fucking bull. And we're officially in a severe bear downtrend. Now, it does not look like a severe bear downtrend yet, but when you're going to be revising these charts a month from now, 2 months, 3 months, 5 months from now, you're going to be like, holy shit. That was the fucking top that Leo was warning us about. That was the shit that they saw at 30 market moves. They told us, they explained us why, and you could be the fucking guy that's going to listen to the media and buy the fucking dip every time, and that's how traders get fucking wiped out and killed. So, but right now, it's timely to switch your strategy to shorten the bounces, and there's absolutely, if you don't stupidly, like, I could be recording this message times and times over, right? I've done it over the years just to stress how important it is when you get a trend reversal shift in the market to start focusing on shorting the bounces, right? And we've been shorting the bounces the last fucking few weeks. I mean, that's a fact. That's why we're able to fucking nail some colossal trades. You know, like ALGN, damn it, IBM, God, Jesus, the list is so fucking big. CHTR, we nailed a couple of big ones in last couple of days too, guys. But listen, if you just focus on shorting the bounces while the top of the market is forming, and that is official, and you got some major catalyst for a severe downtrend. Copper has spoken. You got job reports that now are not going to be able to be faked, but at least as much as they've been faked for like last few years, because the data is, and that happens, right? I told you, hey, they're going to be able to get away with these fake job numbers. They're going to be able to get away with these revisions, right? But now it is that the deterioration, the speed of deterioration, it is so ugly that it doesn't matter who the fuck Trump appoints to the labor of statistics. They cannot manipulate this. The numbers are going to get uglier with each month for the next 5 months. And what's the scariest part about it, and the reason why the market will absolutely drop 50% from current level, is is the fact that Federal Reserve is going to be using the wrong remedy to fix stagflation. So clearly, with lightning fast speed of deterioration in economic data, the only remedy you would expect is lower rate cuts, with the exception that they've tried the rate cuts in the 70s, and it only made the situation worse. And I'm referring to the 70s clearly as the last case of stagflation that lasted from 72 all the way to the 79, 80. And in the early innings of the stagflation case in the 70s, Federal Reserve cut the rates, and that caused some major economic fucking problems. And I think that fortunately it didn't last, right? As far as the market concerned, the drop took about 5 months, and it was a 50% drop. I think history is going to repeat itself. It's going to be very similar at the very least. Could I be off? Oh, Leo, you were wrong. The market only dropped 48.5%. Yeah, sure. But overall, you understand what I'm saying, right? It's the resemblance and the wrong prescription to fix this situation in September is what's going to cause this 50% drop in the next 5-6 months, guys. So if you trade in the right side, you're going to make a shit ton of money. That's a fact. But again, you can't be the market's bitch jumping out on the bounces. And again, like I said, I don't know. This message is so important. If you get it, that's it. You're going to set some trading records you've never thought were even, you couldn't even imagine this shit. It was unimaginable to some of you, the kind of money that you could be making with the current market conditions. But yet, unfortunately, okay, and I really hate this part, right? It doesn't matter how many times I'm going to say short the fucking bounce. There's going to be people that are going to get into a trade. They're going to get into a trade and they're going to jump the fuck out when I'm telling them, hey, short the fucking bounce. They're like, oh, I can't do it. Then they're going to see the shit drop. Then they're going to take the trade. And then the trade is going to bounce in them. And they're like, Leo, I can't take it. I'm jumping out, man. I'm afraid. I can't do this. And my point is this. Traders, no matter how many times I record this message and stress the importance of it, traders are going to go and they're going to do exact the fucking opposite of what I'm trying to explain. And so it's not just understanding the action that is required, but you evolve as a fucking trader for real when you understand to not let your emotions fuck with you. That's why you make a plan ahead of time. You make a plan ahead of time for the week. You make a plan ahead of time, each night, each morning, and you go and you execute that fucking plan. Many traders can make the plan, but they always, 90% plus, always fail to stay and fulfill the plan to the best of their ability without letting the emotions fuck with them. So for that reason, okay, you should be trading with a coach, because I promise you, if you're trading with me, damn it, do you think I'm not going to fucking tell you to not fuck a perfect trade up by jumping out on the bounce? That's got zero chance of happening. Okay? And if you're going to jump out, fuck. You can do it once, twice. The third time you jump out because you're scared of shit bouncing on you, you're done. You're just not going to be trading, because that means you're not fucking coachable. So if you really mean to break some of the bad habits, you come and you trade with me. You come and you trade some of the other... Damn, Jennifer, fucking over 2 million again. Holy fuck. It's fucking amazing that a girl can out-trade some of these fucking guys that sign. It's fucking amazing to me. Anyways, guys, the whole point is major TRO just happened. Copper, okay, job numbers. Oil. Fucking companies setting the tops daily. Stagflation. The wrong remedy that's going to be prescribed in September. 50% collapse. The question is, do you know how to trade all of this information on a daily basis? And do you have the emotional toughness to stick to the fucking plan? Because if you do these things, you will absolutely make $1 million plus in the next fucking 5 months. Some of you will make $1 million plus in the next 15 days. So don't waste your time. Sign up. Hopefully you get a chance to trade with someone here at Third Your Market Moves, guys. I got to roll big fucking times for the short sellers. You got to get excited about it. I'll catch you in the next podcast.